Joining us now, Sam Stovall, Chief Investment Strategist at CFRA, with the Dow down 918 points, just getting uglier, Sam. It's a brutal week on top of several brutal weeks that we've had in this market. What do you do in this environment?
Well, absolutely, Sarah. We've been seeing volatility 3 times as high year to date through April as we have on average going back to World War II. So the market is nervous. And I think that based on the fact that we've been seeing large, mid, small caps as well as the NASDAQ fall by similar amounts, the implication to me is that investors are expecting a slowing economy and that prices are leading fundamentals. And even though we've been seeing an improvement in Q1 earnings estimates, in full year 2022 estimates, that those numbers are likely to be coming down.
If it does feel more about the Fed than about earnings, the S&P, just if you're keeping track, is now down 10% for the year, so a correction this year officially. NASDAQ Composite down 18%, Mike, for the year. What sort of levels should we be watching? What sort of action should we be watching when we get heavy sell-offs like this?
Yeah, I mean, keep in mind the lows that we've traded intraday this year back in March are below 4,200 in the S&P. So, 4,170 was a close in mid-March. That was the low. By the way, the low on the day before the first rate hike. So the way the market has gone is it's worked itself up into an anxious state, anticipating Fed hawkishness, anticipating how aggressive the rate hikes are going to be. And then we got the first hike, and there was a bit of a relief, a buy the news type reaction. Who knows if we're in for something like that? It's more than a week till we get the next Fed meeting. But the market has been unable to make much use of the typical late April seasonal tailwinds. That's for sure. So I think, we're at the zone in the 4,200s where, the market has a few times more or less kind of gathered itself here over the course of 3 months.
4-week losing streak here for the Dow, S&P 500 on a 3-week losing streak, and so is the NASDAQ. Sam, would you buy in a sell-off like this? Would you look for opportunities?
Not yet. I believe that, as Mike was implying, that we still have more to go in terms of what the Fed is likely to do to slow the pace of inflation. Going back to World War II, whenever the Fed started a rate tightening cycle, you had the Fed funds rate above the year-on-year CPI level, and that the average was a difference of 40 basis points. This time around, the CPI is higher than Fed funds by 825 basis points. So we have a long way to go to get to neutral.
Well, I guess the question is how much the economy can handle in the meantime when it comes to these rising rates, these inflation shocks. Sam, some of the better performing sectors, utilities, consumer staples, and real estate, they're down today, but they're working a lot better than materials, healthcare, communication services, financial. So basically anything tech or cyclical related. Do you stick with those kind of stocks, especially after a quarter like Kimberly-Clark just put up?
Well, I think you stick with those groups that are showing strength despite the downward movement in the market. Looking at those groups that are above their 10-week and their 10-week moving averages above their 40-week, you're seeing names like fertilizers, food retail, agricultural products, and farm machinery, as well as many of the oil areas. So I think you basically let your winners ride at this point.